U.S. in hot water over its deficit. We wanted to take a look at other countries facing a debt dilemma, and it wasn't hard to find one, and this one is a big one, Brazil. It's more than $1.4 trillion in debt. And joining me today to talk about Brazil is Latin America strategist for Deutsche Bank, Frederick Searby. Frederick, thanks so much for being with us here today on In the Loop. A lot of people have been bullish on Brazil, but it's only really ironically, in the last couple of weeks that we've seen their market doing well, the Bovespa specifically.
Right. Well, what's been happening is Brazil has the opposite problem that we have in the developed world in the United States, which is they were overheating. They were growing too fast. They had an inflation problem. Of course, here in the U.S., we're trying to fight off a deflationary problem in much of the developed world. So, funnily enough, even though the growth was booming, we had the seeds of the demise of the Bovespa, at least on a relative basis, started to underperform because they had to raise interest rates so high, tightening monetary policy, where we had 12.5% nominal rates and 6% plus real rates that completely choked off any demand for equities. Recently, we've started to see a slowdown in growth expectations. The macroprudential measures, the spike in interest rates is having its impact. Of course, the global environment as well has an impact. So you're starting to see a slowdown, and interest rate expectations have been coming in, and the market's actually started to perform a little better.
President Rousseff took some unusual measures, potentially scaring outside investors. How will that play into Brazil's future?
Well, I think last year what happened was obviously with Petrobras, that was one of the big fears, and it's a fear everywhere in the world. I mean, portfolio managers today are trading political risk, but last year what they did with Petrobras, I think, scared off investors. The deal has a lingering negative impact on Brazil. Then this year they've tried to combat the strength of the real with macroprudential measures, and Guido Mantega has put in some measures that investors frankly don't understand. There's a lot of policy risk and scope for risk. So as they put in those currency controls, some of the investors have said, look, I'm not going to play here because I just don't understand what they're doing, and it's dried up liquidity a little bit.
So has the country perhaps, though, missed a critical window of opportunity? Growth was too strong and it worked against them. Now we're talking about a global recession, and we could see the pendulum swing perhaps for Brazil wildly to the other side.
Yeah, I think, look, Brazil's, the expectation was 4% GDP growth. It's going to come down into the high threes. It's still a decent number, but they have a lot they can do ammunition right now to actually stave off a crisis because they can cut rates. We don't have that with near zero rates in the U.S. They can reverse the higher reserves on the banks. They can release those. There's a lot they can do to unwind that, and that's why it sort of feels like the 2008 crisis where Brazil was hit much, much worse. Then actually they outperformed because it didn't have as big an impact because they have a lot of ammunition still, unlike in the U.S., to fight off any kind of slowdown.
Frederick, we've got 5 seconds. Would you buy here? Are you recommending to investors that they should go long?
We have a 67,000 price target on the Bovespa. We've been cautious on the market, on the Latin American markets all year, expecting a challenging, choppy, sideways kind of year. But you've been paid to take risk in Latin America when the VIX is above 40.
All right. Thanks so much, Frederick Searby.